morning. You're watching Businessworld Live. I'm Danny Laurel. It's the start of a new trading day. Let's kick off with our banner story. President Duterte delivered his sixth and last State of the Nation address. That was yesterday, where he called on Congress to pass a few economic reform bills. Now, in a speech that lasted for nearly 3 hours and filled with many ad-libs, Duterte urged lawmakers to legislate amendments to the Retail Trade Liberalization Act, the Foreign Investment Act, and the Public Services Act. The British Chamber of Commerce of the Philippines said they are very pleased that the president emphasized these bills. A number of business groups have been pushing for these three measures, which all aim to attract more foreign investors into the country. Also included in the president's legislative wishes were a unified system of separation, retirement, and pensions for the military and the police, as well as the creation of a department for overseas Filipinos. The president also ordered economic managers to finish the administration's flagship projects before he steps down next year. He also claimed that the government was able to take away the misery of commuters, citing how they inaugurated new roads and bought new trains. However, Employers Confederation of the Philippines' president, Sergio Ortiz Luis, said the president failed to discuss his transportation plans, saying traffic in Metro Manila is getting worse. The president also mentioned the Delta variant as he warned of a possible lockdown if the more contagious variant causes more COVID-19 infections in the country. Now, Moody's Investor Service says the Philippines is at risk of long-term economic scarring, with GDP growth expected to slow to around 6% after 2022. Now, Moody's Senior Vice President Christian de Guzman says pandemic risks weighed on the country's economic recovery compared with more export-oriented peers in the region. Last week, Moody's lowered its growth forecast for the country to 5.8% this year. It also expects GDP to grow by 6.5% in 2022. But beyond that, they are expecting an average annual growth of 6% from the average of around 6.6% in the 5-year period preceding the coronavirus outbreak. Moody's says this so-called economic scarring may be seen in the country's labor market and the poverty levels, which had improved prior to the pandemic. Moody's also says weaker economic growth would also make fiscal consolidation more difficult, leaving governments with higher debt burdens and less room to respond to future shocks. Okay, guys, markets will be deciding today whether the president's comments have any weight or impact on the economy and businesses. This after we had slid yesterday ahead of the sauna. You can see on my terminal here that slide. It does seem to be the case that we are in the green this morning, up by 0.7%, a little bit of a recovery there. But I mean, this is, of course, after having slid by 3.1% in the 2 days prior. That was the biggest loss we've seen since March, amid, of course, not just the pre-sauna, but also the Delta variant concerns. We've been sliding since at least last Friday. Now, this according to Manny Cruz of Papo Securities. Investors are anticipating the worst, and he says that we could actually be sinking towards the 6,100 levels in the near term. Now, bright spot here, more Pfizer shots seem to have arrived last night. That was 375,570 more shots procured by the government. Now, let's take a quick peek at our movers this morning. You know, a lot of eyes are on the retail space and whether those will be moving after the remarks of President Duterte saying he did want to open that up to more foreign investment. You can see some of the exporters actually jumping. Emperador up by 3%. You've got LTG Group as well up by 2.7%. But there's no real clear picture on which sectors here are moving in which direction. You can see ICTSI and Robinson's Retail, actually some of the bigger losers here. So consumers, both on the top gainers and the loser board this morning. Now, one that I do want to watch out for is Meralco. Now, the earnings of Meralco came yesterday afternoon, just during that sauna, actually. And they have said, very interestingly, that they saw their industrial sales return to pre-pandemic levels as the semiconductor factories raced to close the gap on the global chip shortage. So the sales to those industrial factories increased 23% in the first half of the year. However, they did say that the sales to commercial customers, including malls and offices, are still below the 2019 levels. You can see my terminal here, Meralco, up by 1 peso. That's up by 0.4%. And this comes, of course, as they had mentioned yesterday, their net income for the second quarter year on year up 33% to the tune of 5.62 billion pesos. And this, according to their chairman, Manny Pangilinan, he says you can see the green shoots of recovery. However, not so fast. He did mention we have not given any guidance for the full year because we are quite concerned about the recent spread of the Delta variant, which could lead to further lockdowns. But he did mention they're very optimistic that 2021 profits, barring any unforeseen circumstances, would still be ahead of last year. And finally, quick check on our local unit. The peso weakening a touch, strengthening a touch actually. After those remarks, we are at 50 spot 31, close to 50 spot 31 to the greenback this morning. Checking in on the biggest headlines, we're keeping our eyes on the 18th Congress opened its third regular session with a set of priority measures for the final year of the Duterte administration. Now, for the House of Representatives, House Speaker Lord Alan Velasco said they are on track to approve priority bills like the Retail Trade Liberalization Act, the Foreign Investments Act, and the Public Services Act. That is on top of pushing for the taxation of POGO operators and e-sabong events. While Senate President Tito Soto said that the Senate will work on key legislations backed by the President, Soto added that on top of their list is the bill that seeks to create the Department for the OFWs. The Asian Development Bank is scheduled to approve a $1.75 billion loan for the South Commuter Railway project. Now, this railway project will connect Tondo, Manila, and Calamba, Laguna, ideally by the fourth quarter of this year. The 344 billion peso railway system is part of the flagship North-South Commuter Railway System project, which will be linking Pampanga, Manila, and Laguna by 2025. Now, this loan is by far ADB's biggest financing package for the Philippines this year. Meanwhile, ADB has approved a $400 million loan to help expand youth employment and skills programs in the Philippines. In a statement, ADB says the loan is aimed at assisting the government in boosting job facilitation, strengthening the labor market, improving workplace skills development, and creating healthy work environments in the Philippines. Netizens have called the president's sixth and final SONA chaotic, and here to make sense of all that chaos and tell us what we truly need to know, we have with us Nikki Mapa, senior economist of ING. Good morning, Nikki. Welcome back.
Good morning, and thanks for having me, Danny.
Okay, Nikki, we were speaking offline, and you were mentioning that a lot of these things were actually expected in the last SONA of every president. But were there any surprises for you, any sort of hidden Easter eggs on where our policy is headed with the speech of President Duterte?
Yeah, well, thanks, Danny. I think we can sum up his legislative agenda as being one that would open up the economy further to foreign investment, something that we definitely need to address. He did have a lot of legislation targeted for medium terms or the structural reforms that we definitely need. He talked about his tax reform program, which needs one more tranche. He's passed the first three tranches of train. He's looking for his fourth installment of train. I think that will be also very important in getting in boosting the attractiveness of the Philippines as an investment destination.
Let's talk about FDIs. As you mentioned, this seems to be the focus when it comes to economic policy. This has been met, the idea of opening foreign investments and FDIs at this period, during a pandemic period, has been met with some pushback from local associations saying that domestic players need to get back on their feet first before making it easier for foreigners to come in. Is this something worth exploring, or is this actually, with no doubt, beneficial to our economy if foreigners step in, not just to invest but also to own certain things like utilities?
Yeah, well, anytime you try to push economic development, you should also look at both sort of medium-term goals and aspirations as well as short-term needs right now. And right now, the Philippine economy is in recession. Most of these local players are hurting very, very deeply because of the downturn in economic activity. So I think there had to be a balance. If there's anything I was looking for in the sauna that wasn't there, we saw a lot of the sort of medium-term structural reform agenda. However, we didn't see enough emphasis on getting this economy back to where it was prior to the pandemic, and really giving local players a break given the extreme downturn in economic activity. So I would have wanted a little more balance, and hoping that in the next few months we can see a little more emphasis on domestic players as well.
Is it really structural reform and the passing of these bills that will bring back the foreign investors? I mean, if these bills are passed in the next year or even before his term ends, will that have a real impact on the economy, or are investors simply hesitant because of other factors plaguing our country?
But yeah, that's I guess one side of that's one leg of the ability to bring in foreign investment. Is having the structure in place. Legislation is going to make investments into the country more palatable. However, I'm sure these foreign investors are also looking at the domestic situation. Is there a market here in the Philippines that can partake of their whatever the investment they're making? And let's say they're bringing in a factory. Will there be a local market for their products? I think that's the other side of this, the strategy that the Philippine economy has to focus on. It's getting this economy that used to be a juggernaut, robust, consumption-driven economy. It's no longer that state. We have to get that revived again, and you have to do that through support for the local economy.
Okay, so not everything is structural. But meanwhile, do you agree with this statement? This from Francis Lim, president of Financial Executives Institute. If there's any legacy that the president will leave, it's the structural changes in our business landscape that will make it more conducive. Can you actually say, all things considered, that at least in the past 5 years, he's been able to push for key structural measures? You can see that on my terminal as well.
Yeah, I mean, you have to give credit where credit is due. He had quite a number of bills passed. I think the landmark um, tax reform package was definitely something that has helped the sort of level the playing field. Also, lowering corporate taxes, although very painful at this current juncture that we're in recession, but I guess they were still able to pass it. These things will help continue to bring in investments. I mean, not just from abroad, but local investors and players will want to sort of invest in this environment. However, the pressing need continues to be the recession, and we have to address that as well. Structural reform, very good, check. They've done that very, very well. However, I think the more pressing concern, something that many people were waiting for, was a clear sort of playbook on how to get this economy back upon its feet after this the pandemic, which is continues to hound us to this date.
Based on your historic performance of the Philippines and our ability to pass such reform bills, now that it's going to be his last year in office, an election year, what's the likelihood that these will be passed and even continued over into the next administration?
Well, yeah, he does have quite a number of bills still pending. And on the sort of on the one hand, you have the fact that they were able to pass create during this recession. So that's one sign that they can pass important legislation if they want to. However, you did mention that we're running into that election period, so maybe there's a lot of horse trading going on right now, jockeying for position, trying to get reelected, and all that. Maybe that delays us a bit, but at least from what we've seen over the past year, they have shown the ability, the wherewithal to get important legislation passed. I hope they take that track instead of looking at the May elections for direction.
Let's talk about those elections. Actually, normally election years create a lot of spending and seem to be good for the economy. But in this situation where we need to be spending on the pandemic, third stimulus is trying to be passed. Will this be passed before elections? How will the election year bode well or badly for the pandemic when it's or controlling it? Will we in any shape or form be out of a recession by the time election comes?
All right. So two things. First, on the Bayanihan 3, or the sort of upcoming possible stimulus package, I'd say don't hold your breath because it doesn't sound like the administration is going to be pushing or supporting any such initiatives by other legislators, which is unfortunate because I think we really need it. On the election year, so yes, you're right. We definitely have a boost when it comes to the quarters preceding an election, we generally see an uptick in economic activity. However, this year it's still a pandemic year. We have social distancing and the like, so very different, I guess, landscape for politicos to operate and try to get their rallies going. So I don't think we'll be able to disperse that money as quickly as we had in the past. Secondly, in previous or historical instances, when you look at every election year, the actual driver of that additional spending was actually public construction. Not the consumption derived from that because there were more jobs that came out, but the actual driver was public construction. And in the time of pandemic, if the DPWH or all the other construction activity can pick up in the second half of this year or the early part of next year, then maybe we see a bump in spending. However, I don't expect it to be as forceful or as forceful as it had been in the past. So I have factored this into my growth forecasts. It doesn't look as rosy as others, but yeah, just like every election year, the pandemic is going to stop that as well.
Okay, let's talk about the Moody's issue. They've mentioned economic scaring. I mean, they've already done, certain outlook downgrades. They've already done, GDP growth downgrades. But what do they mean by economic scaring? Is this something very specific, or just general feel that the worst isn't over? I mean, isn't every economy going to be scarred? What's so specific about the Philippines?
Yeah, this is actually the second credit rating agency that sort of pointed this out, this scarring effects that they're talking about. Basically, what it says is that it's flagging the fact that our potential output has taken a direct hit, and therefore we will no longer be performing up to speed or up to the same level that we were prior to the pandemic. Just like whenever you get injured, you get hurt. If you have a scar or you have some long-term effects from that injury, you no longer perform at the sort of optimal level that you had prior to that injury. So the Philippine economy, yes, will get out of this recession. I'd say as early as the second quarter of this year, we will have exited from technical recession. However, the medium term impact of all this slowdown in economic activity, all the foregone investments in capital formation, all the foregone investments in durable equipment, the hit on our education, the kids who haven't been able to go to school, these will have long and medium term impact on our productivity as a nation. So I think that's what they're highlighting, the fact that we're not going to return not just to pre-pandemic levels of growth, but pre-pandemic pace of expansion is definitely going to be very challenging.
Okay, very interesting. So it's not just about consumption-driven economy bouncing back, but also our fundamentals and the long-term outlook, and how that's
Yes.
going to be affected by all of these measures. Thank you so much for that update. That was, of course, Nikki Mapa, Senior Economist of ING.
Thank you. Take care.
And that's the first look into the business day. Today's Tuesday, July 27, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.